Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and we're back for 2025 with economist Stephen Koukoulas to talk about what's happening in the economy in the week ahead. You'll find him at thekouk.com, Thekouk, thekouk.com, and on X using the handle thekouk. Stephen, welcome to 2025.
And welcome, Sean. Great to be back. I hope everybody had a lovely break and is now gearing up for what's going to be a fabulous year for the economy, markets, politics, and dare I say it, the football.
Well, yes, I'm pleased you mentioned the football, but I think we have to start with politics. We're 24 hours, less than 24 hours away from officially having a new president. What can we expect? In fact, this is the impossible question. What can we expect from Trump administration 2.0?
Extreme and uncertain policy change, I think is how I describe it, to be advised. And we know, one thing is that we know how he handled his first term in office because he's been president before. So this time around, I think he's learnt a bit, and dare I say it, he may have mellowed just a smidge. That some of the sort of crazy stuff that he was talking about will be moderated to some extent. But, and this is the important but, things that the market will be focusing on, things that have got the potential to sort of upset economic growth in the economy, to both domestically in the US, but also globally, will be what he does with tariffs. Is there a trade war between China and the US, Europe and US? Is that going to be sort of the sand in the gearbox of global trade flows, which would be, not good news, or to be adding to inflation just when it looks as if we've got inflation lower? Is that going to be the thing that sort of sparks an inflation problem in the US and more specifically globally? It's that sort of stuff that company tax cuts that he's talking about. We'll have to wait and see if they're implemented. But again, that's a huge issue. We've got Elon Musk sort of looking at the budget position to see whether there's some superfluous spending that can be cut because the US budget deficit's huge. And yes, it is huge. But how do you tackle it? Through more taxes or less spending, or a combination of the two? But oh gosh, we'll wake up most mornings like we used to in the olden days. What did Donald Trump say overnight while we were asleep, and think, oh my God, he said that.
Yeah. One thing about Donald Trump, those policies that he's talking about, even if he enacts 20% of them, they are inflationary. You can't get rid of immigrants without expecting wage prices to rise. You can't increase tariffs without expecting the price of goods to rise. What's that mean? And does that flow through to Australia? People always say, yeah, that's in the US. What about Australia?
It is in the US, but as we saw during the pandemic, when there's a global inflation risk, we import it. We buy goods and services that are produced in the global economy, that are freighted here, the logistics prices. And it's funny you should sort of say that, because one of my favorite indicators is the Commodities Research Bureau index of commodity prices. That's one of my favorite economic indicators, because it's an all-encompassing commodity price index, unlike our RBA index of commodity prices, which is really specific to Australia. But this one includes, coffee, orange juice, eggs, and all that sort of stuff. And it is actually rising already. Some people have analysed this more closely than I do, and they say it's possibly in anticipation of some sort of tariff war going on, as we just discussed a minute ago. If that's true, and we get that lift in global commodity prices that's linked to trade dislocation and all these other things, then yes, we do have an inflation risk anyway, that in the next 6 to 12 months, inflation will be higher than we're currently pricing in and currently thinking about, even though those expectations have changed quite a bit while we were on our Christmas, New Year holidays.
Beautiful segue not a lot of economic data this week, but into next week. But we have the December quarter CPI next week. Now, we will talk about that, in 7 days' time. But really, all eyes on that, particularly after the last few weeks, we've had labour market figures. We had those November CPI figures, a fair bit going on.
There's a lot going on. And the labour market figures last week were good. They were terrific news in many ways. Low unemployment, it ticked up to 4.0%, 55,000 jobs or thereabouts. So we've got that sort of dynamic occurring. But in a funny way, it is the CPI that matters more to the RBA, I think, this time around, when wages growth is already decelerating. So next week, when we get the December quarter CPI, which is the comprehensive view of inflation as opposed to the monthly indicator, which is very, very useful. But the quarterly one is the main game in town. It's the one that the RBA like to trim to get their underlying or core inflation measure coming through. And the market's got roughly a 70% chance of a rate cut in the middle of February. If this number, the trimmed mean, I think is the one that's going to be focusing everyone's attention. If the CPI next week comes in at 0.6 for the trimmed mean or less, it'll be game on. 0.7 and above, it might just be enough for the RBA to sit tight, given some of these other political risks we were just talking about with the Trump administration, some of the labour market numbers that we saw last week, which were nice and strong. So, gosh, it's rare that one number has such a dominant influence on what the RBA might do. But I think this one could be one of those that really is yay or nay to the rate cut in the middle of February.
It's going to be a fun year, isn't it?
Oh, I can't wait. I think we're going to be seeing lots of stuff going on, not just internationally, but we've got our own election coming up, sometime in the next few months. We don't know the date yet. But again, the policy agenda is starting to be rolled out by both sides. And if the betting markets are any guide, it's a line ball call, as they say, too close to call. That could throw up some policy issues that will influence markets as well as us people who turn out to vote.
Enjoy the week, Stephen. We'll speak to you next Monday.
Thanks, Sean. See you next week.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.